Hey, everybody. It's your boy, Sean McLaughlin at Options Sean on Twitter X. Today is Thursday, December 4, 2025. Hope you're doing well. I'm doing well. Winter is finally here where I live. If you saw me on the show yesterday talking about the winter, it's winter. Yes, finally got a lot of snow here. But that's not what you're here for. You're here for the All Star Options Jam session. What we do here during this show, if you're the first time visitor, is we review action amongst positions in the All Star Options portfolio service. We review positions that we've exited. If we've made any adjustments, we'll tackle that. We'll update some stops on some existing positions, hopefully ones that are winners, or certainly looking to at least reduce our risks. And we'll review new positions we've put on in the last week. Maybe we'll drop a lesson or two. Who knows? But look, let's start at the top. Let's start at the story, at least to me, the story of the last week is VIX, volatility. We had a bit of a spike a couple weeks ago. I'm sure you all remember. Everybody was freaking out. But man, have we come back quickly and swiftly and right back to the bottom with a 15 handle on volatility on VIX. That's the story of this market right now. And that story is playing out because stocks have rebounded. The indexes are making a push back towards all-time highs once again. And we got some seasonality things coming into play. It's not quite yet time for the Santa Claus rally, but you got a lot of people thinking that way. And you got a lot of last end of the year performance chase happening. All this going into the soup. To me, that tells me we need to be positioned for further upside headed into the end of the year. You may feel differently, and that's fine. That's what makes a market. But I think we need to be positioned for further upside going into the end of the year. All right. So let's talk about positions we have exited in the last week. We've only exited two, and these two really fit into the theme of what's going on with VIX, right? As volatility has come in, these two trades that we're closing here, these were trades where we were fading volatility and or betting on range bound action. We were selling premium, which is what I like to do when you see a VIX rising up here into the low 20s. That's when my playbook says time to start putting on some premium selling trades, right? And that's what we did. We exited a couple last week, and we got a couple more that came out at profit targets this week. So let's start with Microsoft. I wrote a piece about this on Monday, so if you saw it, I'm repeating myself a little bit, but we had a bull put spread. So we were short the January 465 puts, protected the position with a 455 put. We collected 320 on day one when we got into the trade. Well, just 4 days later, 4 trading days later, Microsoft had a gap open, or no, it didn't gap. It traded up to a level where I had my resting order. This actually happened on Friday, which was a half day, right? A holiday shortened day. I wasn't even at my desk. I was out running errands, doing some Black Friday stuff, if you can believe that. I had to, my good till cancel order got filled while I was away. I was driving my car and I got a little notification on my phone. Hey, look, got out of my Microsoft position at a profit. Got out at 1:30. And this is important for two reasons. I already talked on Monday. I wrote the piece about best practices and about leaving good till cancel orders when you have a profit target. Leave that good till cancel order out there because you never know when you might get it, and it might be a quick little thing where you had to be there to get it. And if you weren't sitting at your desk and you wanted to manually put that order, and you might have missed your opportunity. So glad that I did that in Microsoft because that was the best opportunity to exit my trade at that profit target. I believe we might have had a quick visit a couple days later, but man, if I did not act on that thing, as you can see, Microsoft has rolled over. Let's zoom in a little. Microsoft has rolled over since my exit, and I'd be still sitting in this trade right now. I might be up. I might have a little profit in this trade, but not what I had, when I hit my profit target on Friday. So that's lesson number one. Leave those good till cancel orders working when you have a profit target. No sense in just kind of thinking you'll be there because you might not. You never know. Life happens. Okay. The other lesson is not to be greedy with credit spreads or any type of short premium trade. All right. When I sell premium, and I talk about this a lot, I generally will buy back my spread at half of what I collected. So if I collected 320 for this spread, I'm looking to buy it back for $1.30. All right. That's actually, I want to buy back for $1.60. This is a typo. Let me correct that typo. I bought it back for $1.60. Excuse me. There we go. Let's be facts only here. Facts only. I covered it at $1.60. All right. That's half of what I collected. I like to take, I say this every time. I want to take the easy money off. It's not easy money. Nothing's easy, but I want to take that early theta decay that I get when I get the direction right and the volatility initial puff comes out of it a little bit. I want to get that first hit of profit, right? I don't want to sit around and hang out for that last quarter, that last dime, that last nickel, because as the position becomes more profitable, I have less to earn while holding all of the risk. Okay. I don't like that math. So if I sell premium, I'm looking to buy it back at half of what I sold it for. Usually, there's some exceptions, of course, but generally speaking, that's the rule. If I sold like a naked put for $4, I'm looking to buy it back for $2. Right? If I sold a call spread for $7, I'm looking to buy it back for $3.50. That's just a rule of thumb that keeps me out of trouble. And in this case, it kept me out of trouble. I had my profit target. I got hit. Boom, I'm out. And we had a scary moment yesterday. If anyone who's long Microsoft, there was some news that hit the tape. Who knows what the news was? I don't really care, but there was some news that hit the tape. Microsoft tanked. If you were still holding long position Microsoft, you might have been freaked out a little bit. Me, I wasn't. I already booked my gains. All right, enough about Microsoft. We're out of Microsoft. Next up is IBIT. This is the Bitcoin ETF. We put a bet on, or I put a bet on, that Bitcoin was going to stay range bound, and that the high implied volatility that we were seeing in Bitcoin as Bitcoin was selling off, that was freaking everybody out, that I would have a great opportunity to sell premium here. And the premiums being high such that they were, it allowed me to sell further away strikes. So I was able to sell the 57 calls on the upside and the 44 puts on the downside, and I protected it $5 away on each side with long options. And the bet was we were going to stay in that range. And sure enough, it did. I didn't have to hold this trade for too long, little under 2 weeks. I sold it for $1.20. I bought it back for 60 cents. Exactly the way I drew it up. I love it when that happens. And look, a 60-cent profit might not sound like a lot of profit. Okay. I get it. Doesn't sound like a lot of profit. Well, first of all, you could have done this in size, right? You want to size these types of positions such that you're not risking more than, say, 2% of your portfolio. So in a trade like this where I collected $1.20, the most that spread could be worth is $5. The most I would have had to pay, because either the credit spread would have been fully in the money or the put spread would have been fully in the money, not both. And those spreads would have cost $5 to cover in the worst case scenario. Well, I collected $1.20. That means I had $3.80 of risk. Okay. So if you're trading a one lot, that's $380. Okay. You could do enough units of this trade such that it works out to be 2%. The risk is 2% of your portfolio. So if you have a $100,000 account, you could risk, let's say, $2,000 on this trade. If you're risking 380, back in the envelope math, so maybe you do 6 lots. If I'm doing that right, 5 or 6 lots, 6, 7, as the kids say, 6 or 7 lots of this trade, and a 60-cent profit when you have 6 or 7 lots. Hey, that's $420. That could be $400 in profit. That's not a bad trade. Okay. But the thing about these credit spreads and premium selling in general is that these are never home run trades. They're not designed to be home run trades. They're designed to pay you money when the market's going sideways or freaking out, and you need a little portfolio diversification, right? Because your other positions aren't working, your directional bets aren't working. This is where you dig into your tool shed and you pull out things like iron condors and strangles and short puts or short call spreads. This is when you use those tools, and this is what they're for, to pay you some money when everything else isn't working. And they did exactly what we needed them to do, and they did their job. And now the rest of the things are working. Speaking of things that are working, let's go update our stops here. We only have, I don't have them here on the thing. One sec. Here, CM is one of them. We're raising our stop in CM to 83. Look at this, man. This is a trade we've been in for a long time. We talk about this a lot on the show because we've been in it for a long time. We got into it back in May. We're long the January 75 calls that we paid $1.50 for. We sold half of them. when the stock got to 85, which was according to my plan, I wanted to sell half of my position at 85. I sold half of them for 11.15, already locked in very handsome gains in this trade. But look at the stock now going on to make new highs. This is the biggest green candle we've had in this stock since we got into this trade. How about that? That's not bearish. So I'm feeling pretty good about this trade. These are January options, so we have a few more weeks before we'll start tightening up our stop on this thing to, to just harvest these gains. But we got some real nice gains in CM, but we're moving our stop up to 83. That's our trailing stop now. Next one was Rio. We're long the March 75 calls at $2.60. Stock's going our way. This is great. I'm moving my stop up to 69. I don't want to see Rio get below 69. That would be a bearish development for me. The other one was, Vale. Here we go. Vale. Look at this thing go. Look at this baby go. We have the full position on, and we have until next December. We have a whole nother year for this thing to keep ripping for us. Unbelievable. This could turn out to be a monster trade. It might not. It could roll over. It could die on us. That happens. But the best winning trades, the best trades I always have, the ones that end up being the biggest winners for me are trades that work right out of the gate. And this thing, I mean, we bought this dip. We bought this on a red candle day, buying the dip, and it's just been doing nothing but go our way since we got in. This has the makings for a monster win, and we have a long time. I'm raising my stop to 12, and then I'm probably going to let it sit there for a while. I think. We'll see. We'll see. Because we have until next December. All right. All right. So that's all we got for updated stops today. There you go. For those who like to take the screenshot, there it is. Take that screenshot. Those three stocks are the ones we're updating our stops in. And then next up, let's talk about what new positions we've put on since we last spoke. Let's go here in no particular order. We have just two. We had a holiday shortened week last week, so we didn't put a new trade on Friday last week. So we'll only have two trades this week. And for anybody who wants detailed options plans of the trade details, what structure I'm using, how I'm managing risk, where I may or may not be taking profits, all of those details are laid out at allstarcharts.com. Head to the members section, head to the options section, and you'll find detailed trade plans there for you for these trades and every trade that we've got on. So without getting too into the weeds here on OMF, we put a long trade on in OMF on Monday this week. And the next new trade we put on, we put a bearish trade on in Copart. Is it Copart? Yeah, Copart. I don't even know what they do. Who cares? Look at this chart. It's dog shit. This chart's been doing very poorly. And you can see here, it's been kind of just hanging on a ledge. Let's zoom in a little bit. Over the last couple of weeks, it's been just hanging on a ledge. And what I can't show you here, because I have to go to a different screen, but volatility has come in significantly. And so when you have a situation where volatility is cheap on a bearish idea, it's a great opportunity to buy puts. And that's what we did. Look, I gave away the farm there. I bought some puts. Haha. There you go. Find the details at allstarcharts.com if you want all the details. All right, everybody. I think that's all I got for you. I don't know if there were any questions there. Let me see if there were questions. If you want all. Sorry, I didn't have the chat up here. Dan, I see you, buddy. Hey there. Risky business. You're late to everything today. Well, you're here. You're here. Let's see, Todd. Hey, Sean, I'm new to the group. I put the Copart trade on the other day. Any other recent trades you would say are still viable? That's a good question, Todd. We get people that join All Star Options all the time, and one of the first things that they ask, a very common question is, can I still put on some of these trades you put on a week ago, 2 weeks ago, 3 weeks ago? And my answer is maybe. Obviously, if I'm in the trade, I still like them. You have a decision to make. If the trade is down and you could buy it at a better, if you can get in at a better price than me, and that makes you feel good, great. You do that. If it's a trade I'm in and we've been in for a while and it's already up, you might be chasing at that point. I would maybe tap the brakes on those. But look, there's no shame in just starting fresh from here, right? If you're new here, you start with the first trades you get and just go forward. We're gonna have new trades every week. We usually do 2 or 3 new trades every week. Don't feel like you're missing out on anything. All right. FOMO is an enemy, is the enemy of traders. Don't do FOMO. Okay. Just do you. Just do you in accordance with your risk management plans. And since you're new here, I'll let you know that I tell everybody when you're putting these trades on, ideally you have a large enough portfolio. You don't need a large portfolio, but ideally it's large enough so that when you put these trades on, you're not risking more than 1 to 2% of your total equity on any one trade. Okay. If that's any piece of advice I can give you, make that the rule. Okay. You never want any one trade to hurt your portfolio too much, because not only do large losses hurt the portfolio, right? It messes up your psyche, it messes up your brain, it messes up, it puts you on tilt. You guys have heard of being on tilt, right? Gambler's tilt, right? If you're on tilt, you're not making good decisions. You're not trading from a position of strength. Large losses are the number one thing to put traders on tilt. So do yourself a favor and never risk more than 1 to 2% of your equity on any one single trade. You'll be happier. I promise you. All right. That's all I got for you guys. Thanks for tuning in. And if you have any questions at all, shoot me an email, info@allstarcharts.com. You can see it there at the bottom. If you are not a subscriber to All Star Options, what are you waiting for? Get involved. Stockmarkettv.com/get All Star Options to get involved. And of course, I have a free options newsletter that I write several days a week. You guys should be you should be getting involved in that. I write some good stuff. I think I'm a little biased, of course, but I write about stuff that matters to options traders. Check it out. All right, folks, have a great rest of your week. Winter's here. Enjoy it. College football championships are this weekend. Enjoy that if that's your thing. Get outside, whether it's warm, cold, or whatever. Get outside. Your body will thank you. All right, take care, everybody. See you next time.